How Aston Martin was drawn into the Saudis' electric car master plan. On Monday, Aston Martin struck a deal with the US car company Lucid to buy its batteries, motors, and drivetrains, saving the relatively small British company from the multi-billion-pound challenge of developing its own versions. While bigger companies such as Porsche owner Volkswagen are spending huge sums on the switch to electric cars, Aston, the thinking goes, will be able to secure a supply of what it needs to end its reliance on petrol for a fraction of the price. Shares in Aston jumped 11% after the deal was announced. As Aston finance boss Doug Lafferty puts it, they've spent billions. We're spending a couple of $100 million to access that. He said the agreement was like a library card to give the business as many parts as required. For now, many of the specifics remain under wraps. Sales targets, prices, and whether Aston Martin will simply electrify familiar brands or launch new models are among the details yet to be revealed. A battery-powered SUV version is, however, understood to be close to the top of the list. The deal brings Aston closer to Saudi Arabia's Public Investment Fund, PIF, which controls Lucid and is also the second biggest shareholder in James Bond's favorite marque. It comes as part of a major push by the kingdom as it seeks to diversify itself away from petrol and plow part of its oil wealth into new technology before the fuel is banned. Until recently, PIF had shares in McLaren, only selling them to Bahrain's state investment fund in recent days. Other Saudi companies have also been firmly backing electrification, including Abdul Latif Jameel Investment Company, founded by the late Sheikh of the same name, which was an early investor in Rivian, the U.S. electric truck maker, and remains among its largest investors. The Saudi authorities have also been seeking to secure a chunk of the electric car supply chain, developing two processing facilities to supply the likes of BMW with lithium, an essential ingredient in batteries. The Lucid deal offers Aston what it needs to meet looming demands from customers to offer electric models, while Lucid gets the much-needed cash. As well as owning $100 million, £79 million, in Aston shares, it will receive $132 million in cash over the next few years. Aston, a 110-year-old brand, will aim to launch its first battery-powered car in 2025, using 4 motors, compared to the 3 in most performance electric cars. It will be designed using customized versions of new Lucid drivetrains, the most recent of which can deliver at least 1,200 horsepower. For Lucid, a company set up by former Tesla executives, it will provide a boost following recent financial struggles. As with many new electric vehicle companies, Lucid has been hit by headwinds as traditional car makers start launching their own lower-priced models and the cost of borrowing creeps up. These are pressures which, in the most part, have been soothed by support from PIF, which owns the majority of its shares. Earlier this month, the U.S. company said it planned to raise $3 billion, of which $2 billion would come from the fund. Lucid has responded by laying out its future in Saudi. It plans to build its first overseas plant in the nation, and Saudi has agreed to buy 100,000 of its cars in the next decade. All this comes as part of the kingdom's ambitions to produce 500,000 electric cars a year by 2030, green plans which have been spearheaded by Crown Prince Mohammed bin Salman. The sixth of 25 sons to the Saudi king, Salman bin Abdulaziz Al Saud, or MBs as he is known, has positioned himself to become the heir to the throne of the royal family, which has a combined wealth of £1.3 trillion. His most expensive project is Neom, a city that is being built from scratch on the Red Sea coast. It is expected to cost $500 billion and be powered by renewable energy. But the Gulf nation is up against a large and rapidly shifting car market in which it will still be a small player. The dominance of US and European car makers is already being challenged by China, the world's biggest market, which has spent decades building up a vast network of gigafactories and lithium refineries, as well as investments in mines to supply its electric car industry.